Hi, I'm Melanie Burton. I'm the Asia mining correspondent for Thomson Reuters. And I'm here today with Cameron Vorias. He's the MD and CEO of Sojitz Coal. And Cameron, I believe this is your third time here at the Energy Mines and Money. Is that,
Yeah,
although a bit virtually this time?
it's a little bit different than the last couple of years, but it is my third one. I was very, very happy to be part of the very first one that we did, and we spoke about a whole range of issues around developing coal mines. And last year I was even interviewed around software and ERP development, and I was glad to be back again for the third year.
Oh, excellent. Wow, welcome. So, um, you guys obviously bought the Gregory Crinum mine from BHP last year. So I thought we could just start with having a look at how that's helping you transition from energy coal towards met coal. How are the ratios going at the minute? How will that evolve?
Yeah, if I just give you a little bit of background on that, Sojitz took over Minerva operation in 2010. And since that point in time, I guess we hit a bit of a downturn in 15. We needed a replacement for Minerva. Minerva's still operating, but that's when we built Meteor Downs mine in 2017. And at that stage, the organisation as a whole was quite heavily skewed towards thermal coal. As a result of the 10 to 15 year plan that the corporation put in place a couple of years ago, there was a very clear directive from our managing director and president in Tokyo, Fujimoto-san, as part of the decarbonisation debate around the world to reduce our overall thermal coal production by about 50% by the year 2030. So that embarked us on a journey to look at metallurgical coal in a lot greater way. And I guess as part of that, that was one of our key focuses in the purchase of Gregory Crinum, which occurred almost this time last year, which was about April, May last year. So we've been putting Gregory Crinum steadily back into production, which is good, and it's now hitting some of its nameplate productions. So if I look at 2017, we were almost across the group, apart from some equity coal in coking coal, we were almost sort of 80% thermal coal and about 20% met coal. In 2020, we now see ourselves sort of reversing that to about 45% in thermal and about 55% in met. And with the growth of Gregory Crinum, obviously Gregory open cut is now up and operating. We are currently looking at what we do with getting Crinum up and operating. It's one of our priority projects at this particular point in time. By 2021, we'll be probably seeing somewhere in the order of 35% thermal coal and 65% met coal. And if I look then at 2022, our growth, our projects that we have in the pipeline for development, by 2022, we see ourselves at about 20% thermal and about 80% met. So there's an enormous transition towards met. That's clearly where we're going as far as our strategy is concerned here, predominantly in Australia. All of our operating mines are here in Australia. We still have one operating equity asset in Indonesia, but most of our growth pipeline is here in Australia.
I see. And I know that you're looking to start Crinum and go underground there. I was
Yeah.
wondering, it's been a tough year for coal prices. I think we've seen a little bit of a rebound in the past. Yeah, I saw you. I saw you then. Yeah, seen a little bit
Yeah.
of a rebound in the past month, but not so much. So, how is that impacting your growth projects and the market more generally, if you like?
Yeah, I think if you look at 2019, we saw a prices start to come off as recessional type environments were starting to hit anyway. So we've always been at a time when we're trying to bring Gregory Crinum up and running. It was a challenge. There's no doubt about that. Trying to move spot tonnage into a market that was relatively oversupplied. So in 2020, as the mine has really got itself up to its nameplate capacity, again, it's been a big struggle. We've seen coal prices come off by 25 to 30%. A very small movement back, not very much at all, to be quite frank.
No. I was just trying to be nice. I was trying to be optimistic for you.
Yeah, look, I'd love to be optimistic too, and we are, to be quite frank. And as a result, we've done nothing at our operations yet to slow down. In fact, at our Meteor Downs operation, we're growing our production as a result of trying to reduce its overall unit rates. So Meteor Downs is moving up to a 1.5 to 2 million tonne operation. At Gregory Crichton, we're doing exactly the same. We're growing our production.
You're trying to cut unit costs here because of the
trying to cut unit costs, but not by not slashing our workforces. We're trying to keep our workforce at a very steady level. So we are quite optimistic. We do actually see some elements of green shoots returning in the market now, not necessarily in China, but more so around the developing countries in Southeast Asia. We're still moving small amounts of coal into India and small amounts of coal into Europe. So we are starting to see demand come back, and I'm relatively confident by the time we get to, I would say, back end of this year, we'll start to see some price recovery. But it's good to see demand there, not necessarily price at the moment, but I think that will follow the signs we're seeing in increasing demand.
Because I understand that Sojitz is relatively unique among the Japanese trading houses, certainly the ones in operating in Australia, in that you sell not just to Japan, but as you said, to other regions. One of the comeback regions that we've understand has better demand for thermal coal, in particular Southeast Asia. Are you seeing any particular trends that? And sorry, I should also say this is probably in the context of China saying that it has reached capacity at some of its ports. So seems to be a couple of jigsaw piece puzzles moving around here. Please give us your...
From a thermal coal perspective, Melanie, our operations are very much focused on supplying into the Japanese market. We have one very, very good customer in Japan that we supply most of our coal to. And we haven't seen any change in that demand out of Japan, which has been really, really good from that perspective, and has stabilised our thermal operations so much. From our Meteor Downs operation, we're growing that production at the moment, and as a result, with that growth, we're seeing demand coming out of those more developing countries in Southeast Asia, and we are starting to move coal into those countries right now, which is a really great sign. So,
this is energy thermal coal or met coal?
This is energy thermal coal. Being a Japanese company, as you mentioned there before, there is a very close connection with the JSM as well as the JPU. So we meet
the JSM and the JPU. Could you tell us what they are?
Sorry, JSM being the Japanese steelmakers and the Japanese power utilities being the JPU. So we have a great relationship with each of those. So we're certainly keen on Japanese company supplying into the Japanese market, but we're not that focused on just that market. We're seeing the developing markets around Vietnam, Malaysia, even Cambodia. We've been selling coal in a variety of different areas, and we're certainly waiting for India to come back into the market again from a met coal perspective. And it is, but when you're selling a spot ton, it's often very, very difficult to move spot tons in a world that doesn't really want that much coal until it starts to open back up again, and the supply and demand for steel is back to where it was pre-COVID times.
And do you have a sense on when we should expect that to start happening? Like, are we looking at sort of 3 months, or maybe a bit longer?
I think what you're going to see, what we're seeing at this moment is as I mentioned there before, a significant demand increase. And it's literally been in the last couple of weeks, which is a promising sign. If we had no demand and low prices, it would be, I would see that as being quite bearish going forward. So our forecasts at the moment is probably we've still got to wait for India to come back in a bigger way, and we're expecting that around that October-November period. But we're sort of thinking by the start of the next JFY, the Japanese financial year, which is the 1st of April next year. I'm not saying we're going to be back to pre-COVID times, but I think what we'll see is a lot steadier growth rate in that pricing. I also think that what countries are doing around the world as a result of COVID at the moment is focus, as they should do, on the health of their people and making sure people are well catered for. But I think coming and emerging in the world will be a greater stimulus sort of packages around infrastructure, which will obviously filter through into greater demand on coal.
Thanks, Cameron. Well, I think we have to wind it up here. So thanks for your time today.
Great. And I'll see you in year 4. Thanks very much.